Hi there, this is Darren with Morpheus Trading Group, and we're back with another exciting episode of Morpheus Crypto. In our last video, we had highlighted how the market had quickly flipped from a short to intermediate term bearish bias to a bullish bias after Bitcoin exploded higher above its 50-day moving average and downtrend line. And that breakout in Bitcoin has lifted the entire crypto market, which is now entering into a short-term consolidation mode. So in today's video, we're going to dive into what may be next for the market. We're going to talk a little bit about corrections in the market, and then we're going to take a look at the top altcoins on our radar for potential buy entry. So hit that like button, be sure to subscribe, and let's get started. Since our last video, Bitcoin and the overall crypto market have certainly given us a lot to cheer about. The bullish sentiment has been electrifying. However, as we know, after every sprint, there's always a moment to catch our breath. And this breathing space in the market is what we call a correction phase. And understanding it could be the difference between a profitable trade and a missed opportunity. So let's talk a little bit more about what a correction means. A correction can come in two flavors. There's a correction by price, which is also known as a pullback, and a correction by time, which is known as a consolidation. So let's break them down. A correction by price is like a marathon runner pausing for a water break. The price pulls back, retracing its steps to meet the moving average. While it may seem like a setback, it's often just the market gathering strength for the next sprint that often goes to new highs. Now, on the other hand, a correction by time is more like a power walker, keeping a steady pace rather than a marathon runner. Here, in a correction by time, also known as a consolidation, the price moves sideways, letting the moving averages rise up and provide support. This is usually seen as a more bullish sign, as it suggests the bulls are simply taking a breather, not losing interest, and the sellers aren't stepping in as soon as the bulls take a breather. Right now, both Bitcoin and Ethereum are acting like the power walkers of the market. They're consolidating in a tight range near their breakout highs rather than retracing their steps. When the June 20th breakout propelled Bitcoin from 26,500 all the way up to 30,000, it was quite a massive run for a short period of time. Now, a correction by price would have meant that the price actually pulled back and dipped lower after that run. And that's typically what we see in most uptrending markets. But a correction by time, known as a consolidation, is actually more bullish because the price just moves sideways rather than pulling back. So notice here, I've drawn this rectangle. The price action on this hourly chart shows that Bitcoin has just gone in a tight sideways range since it's rallied and it's near its highs. So it's merely consolidating, which is a correction by time rather than a correction by price. Notice how this correction allows the moving averages to rise up and provide support. We have, for example, the 50-period moving average on this hourly chart is just now today coming in to meet support at the price through the correction by time. So alternatively, if there was a correction by price, we would have seen a dip down to test this level, but the correction by time accomplishes the same effect. The moving averages rise up to meet the price after several days of consolidation. Now, when you have a correction by time, it's important to look for confirmation of the volume pattern. What we want to see is higher volume on the breakout and lighter volume during the consolidation. And you can see here we had big volume spikes on their way up. And since we've been consolidating, the volume has dried up. We had a little bit of higher volume selling here, but nothing too significant. And that's what you want to see. If you have higher volume during the consolidation than you had during the breakout, that's a bearish signal because it indicates institutional selling into strength, and you wouldn't want to see that. So the volume pattern here is confirming our sideways consolidation and our correction by time. Now we've zoomed out to the 4-hour time frame, and we have that same rectangle you can see now where each bar represents 4 hours of price action. And you can see here that when this rally came on June 20th, it came fast and furious, pretty much went straight up without much of a correction until the rally was done. So when this happens, especially after a bearish phase, it's easy to miss that initial breakout. So if you miss that initial breakout, don't feel bad. That happens a lot. And in fact, it is a bit risky to chase the breakout. At MTG, we never chase breakouts because the price can reverse on you at any time. So when you miss a breakout, the most important thing to do is wait for a correction of some type, either a correction by price, such as a pullback, or a correction by time. either one gives you a lower risk entry point than chasing the price. Now, when Bitcoin broke out above its 50-day moving average, and let's go to the daily chart here just to refresh your mind. You can see here 3 days ago how Bitcoin blasted above the 50-day moving average, which also broke this downtrend line, right? So when that happened, what we did is we told all our members in the Morpheus Crypto chat room, we said we were going to wait for the first pullback entry or correction by time that gave us a relatively low risk entry point into Bitcoin. And that came yesterday. And we bought Bitcoin yesterday when it came into support of the 10 period moving average on the 4-hour chart. This green line that you see here is the 10 period moving average on the 4-hour time frame. And notice here yesterday how Bitcoin came into that. Let's go ahead and get rid of this rectangle. Bitcoin came into support of that moving average and just dipped below it slightly, what we call an undercut. And since then, it's been holding on to that support of that 10 period moving average. So this is a little inside secret here at MTG, and that is that for our style of trading and for our time frame of trading, after a big breakout, the first touch of the 10 period moving average often presents a relatively low risk entry point where buyers step back in again after that. So we use this as an indicator for where to get in, and we're actually long Bitcoin from 29,580. We almost got the low of this move because we were, after we had this breakout, we were looking for a test of this moving average as our entry point, which we got. Now, if we zoom out to the daily time frame, we actually see here that what's going on is we've started to form a bullish pennant pattern. And it's only been a couple of days, so you can't see it too well. But you can see there the start of what we call a pennant. And this type of pattern is a continuation pattern. So we've got an uptrend. So we could look for a resumption of this breakout to break out above this pennant and to continue to new highs. Now, we do have to be aware of the fact that we've got some resistance here, which is the highs of 2023 from back in April, on April 14th. And that's right around the 31,000 mark. So you notice how the rally that we had a couple of days ago stopped just shy of that resistance mark. So when we get another breakout attempt here after following through on this pennant, we're going to be watching closely at how the price action responds on this test of the 31,000 level. Now, if we break out above that level, then it's off to the races, and we could see a significant run due to a breakout above resistance. But for now, the price action we're seeing in the market is very healthy. Again, keeping in mind, I want to make sure you understand that a sideways consolidation near the highs is bullish. And we actually want to see this more than if the market just kept going higher. You see, when a market goes up too quickly, then it also tends to fall back down just as easily. So what we prefer to see is this initial thrust higher and then a nice healthy period of price consolidation. This price consolidation builds a base of support that enables the market to move higher later and it'll be more stable than if we just continued higher without any type of a consolidation or correction by time along the way. So Bitcoin looking solid, and again, we're long as we got that pullback entry. And Morpheus Crypto members should note our exact stop price that we sent via the trade alert. Although Ethereum broke out alongside of Bitcoin this week, it has been lagging Bitcoin, and that's evident here by just looking at the 4-hour chart. We had the Ethereum breakout, and notice that we've got a correction by price, a pullback, whereas Bitcoin only traded sideways and consolidated near its high. So you can see the difference there. Bitcoin more of a correction by time. Ethereum is, it's still near its highs, but it has pulled back more than Bitcoin and is actually firmly below its 10-period moving average. So you can see the divergence and the slight relative strength in Bitcoin, which means that Bitcoin is still one of the best plays in the market right now for swing trade entry. Now, if we zoom out to the daily time frame of Ethereum, we can see why we may be having a little more trouble, because there's more overhead supply than Bitcoin. Whereas Bitcoin is testing only 1 day of resistance from April and about to break out to a new high of the year, notice that Ethereum has a lot more overhead supply and resistance from higher levels. In fact, we can see this horizontal price resistance right around the 19,020 mark, which is from the late May, early June highs. And that's where the price action stalled when we tried to rally this week. So although Ethereum is, basically forming a bull flag, we should expect a breakout attempt of this horizontal price resistance level, but watch it closely. If Ethereum can clear this level, then we could see a strong rally and return to strength in the altcoin market. But for now, our money is still on Bitcoin based on what we see. Remember, we trade what we see, not what we think. Now, since the market's breakout, we've been scanning hundreds of altcoin charts to look for new and emerging relative strength. And let's go ahead and dive in and take a look at a few cryptos that are on our radar right now for potential buy entry. First up is STX. STX is one of the only altcoins that actually showed relative strength to Bitcoin on the breakout. The same day Bitcoin broke out, STX had a monstrous rally on big volume, and that continued for 2 days straight. Launched a price from about 60 cents all the way up to almost 90 cents, nearly a 50% gain in just 2 days. So STX had a powerful, powerful breakout. Aside from breaking out above its 50-day moving average, which was a very important technical feat, one thing that could be driving STX is the fact that it's one of the only altcoins that's currently registered with the SEC as a security. So there could be a bit of a relief there and anticipation of money flowing into STX, along with it being a fundamentally solid crypto. Now, as I mentioned, we don't chase breakouts. So when we saw this breakout in STX, we began to wait for a pullback, and the pullback came yesterday. You can see we had a slight pullback, dip below, undercut the 10-period moving average, and now we're actually finding support right at the 20-period moving average on the 4-hour chart. And when we got that slight pullback yesterday, we sent a trade alert to Morpheus Crypto members, notifying them of our buy entry, and members should note the trade alerts for our exact stop price as well. Now, given that STX had such a massive rally in just a couple of days, we could definitely see some more sideways price action, a little bit of chopping around here for a couple of days. But since the rally was so strong, we did want to go ahead and make sure we got a position on this first pullback. So we're now just patiently waiting for the consolidation and the price action to build a base to move higher. So STX definitely one of the strongest altcoins in the market since the breakout this week. Next up is ANT. Ant is another top relative strength crypto that actually broke out above its base last week when the market was doing nothing. This had a stealth rally and has been showing great relative strength. It's above its 10, 20, and 50-period moving averages. And Ant is now on a pullback. So we're monitoring this pullback for potential buy entry. Ideally, we'd like to see the price touch this rising 10-period moving average. So we're watching closely on the price action of Ant, and we will send a trade alert to members if we spot a low-risk entry point in this high relative strength crypto. Next up is SFP. SFP is SafePal, which is a digital cryptocurrency wallet. And you can see here that about a week ago, we had a massive breakout on huge volume that powered above the 50-day moving average. Since then, SFP is on a pullback, which is a correction by price. And again, we're monitoring this pullback as the rising 10-period moving average nears the price. So that's another one on our radar is SFP. And again, we'll send a trade alert if we decide to enter SFP with a suitable low-risk entry point. And last on our radar is MTL. MTL is also showing high relative strength, trading above its 10, 20, and 50-day moving averages. Now, the thing we do not like about MTL is that it does have a history of breakouts that don't go anywhere. We break out and then just drifts back lower. So we do need to be aware of that. It's not one of our top plays because of that fact, but it's definitely worth keeping on your radar because of this volume. We do see steadily increasing volume. And as the volume increases, then the price action could become more stable. So we definitely want to keep an eye on MTL, but it's not something that we're looking at buying right now until we can see if the breakout can form a bit of a base with this last breakout, which would enable the price to hold up better. By the way, if you're out there scanning altcoin charts looking for relative strength, here's a little trick you can do right now. As I've highlighted here with this rectangle, look for a bullish crossover of the 10-day moving average moving above the 50-day moving average. On this chart of Bitcoin, we see that just yesterday, notice how that green line, the 10-day moving average, moved above the red line. And that's a bullish signal. And notice that that hasn't been the case for quite a while. Last time that happened was back in March when the 10-period moving average crossed above the 50, and that led to a rally. So that's a bullish signal that we see in Bitcoin. And when you're out there scanning the altcoin charts, look for a similar crossover. If you see that 10-period moving average crossing above the 50, and you also want to see the price above the 10, 20, and 50, any altcoins that meet that criteria have relative strength and are definitely worthy of being on your radar. To find out more about Morpheus Crypto, head on over to morpheustrading.com and click on Crypto Picks. We hope you enjoyed this video, and we'll see you again soon.